G'day folks, welcome back to Pete's Investing on 22nd of July 2024. This is a platinum, copper, iron ore and crude oil update. Now, all have dropped since our last update, and notice we've got a bullish divergence, and I'll go through what that means in the channel, but make sure you first of all you subscribe and hit that like button, and also subscribe to or follow my Twitter account, which we do regular small updates in between these videos to keep you up to date with any moves in the markets. First off, let's look at the heat map, and we use the CCI 150 of these various charts of trends. So we look at the platinum up here, for example, predominantly bullish and neutral on the monthly level for the platinum, crude and copper and iron ore instruments. But as you can see, predominantly bearish on the weekly and daily, so they're all pretty much showing a nosedive at the moment. Likewise, just down here, just a quick update, the US market along with the other world markets are showing a bit of a drop in their prices lately as well. So I'll keep you up to date with those as well. So looking at platinum first off, there is no CCI on the monthly, although you can see there based on the price chart, it looks pretty much neutral at the moment. On the weekly, it's broken down below the moving averages, giving us a bearish signal, and there is no divergence to talk of on the weekly. On the daily, we did see it bounce off this key resistance at 1093, broke down, bounced off this support, a key support at 945, this minor resistance at 1036, and are now bouncing off this 955 minor support. But notice the daily is still in a bearish trend, hitting below the moving averages. And these moving averages, by the way, links in the description below to learn how to draw those in a separate video. On the hourly chart, and remember we trade on the direction of the higher time frame. So if you're trading on the intraday in this example, you take the trend in the direction of the daily. In this way, it's bearish. So we only take short trades. So you would have been wise to take a short trades back here when it broke below. There was a bit of a sideways movement in there, but this one broke below, and that would have been a nice little trade to take, and you closed it out near the bottom there when it broke into that moving average range. Now this fell off a bit more, but notice we've got a divergence. So if we take the trend line from there to where the CCI is at the moment, or you would have taken it to that point there, and you take the same divergence levels there, so you can see it's a bearish move to the downside on the price, but the CCI is moving higher and the CCI is still rising. And now what we do then is we look at a potential target area, and we draw a Fibonacci between that low and that high, and our minimum target range for a divergence. And we don't trade these, we just look at these as a potential for where it may continue to the downside. And what it's done here, the minimum target range is 23 to the 38% level, and more than 90% of the time it hits these little retraces. In this case, it's hit it exactly, and now it's bouncing back down again. So, and you can see there the CCI is now moving back towards the moving average range. Now, there's no guarantee it's going to continue dropping, but what we do is we just keep following the CCI, and if it keeps rising like it is, then we expect the price to eventually start rising as well. US crude showing bullish movement on the monthly, it's above its moving averages. On the weekly, it's broken down below that very thin moving average range, so it's giving us a bearish signal. And on the daily, it's also bearish below the moving averages, so giving us a bearish signal. But again, notice on the daily, it's bounced off that key resistance at 84.06, and now hitting this minor support at 78.68. Call that a minor support as well. Notice as well, I've drawn this Fibonacci range. It's actually come down near the 50% level. So there's still an opportunity for it to bounce to the upside in the near term. If we go to the hourly chart, again, taking the trades only in the direction of the daily trend, so you would have taken short trades from that point there, which was the 9th of July. So if we go back to the 9th of July, you would have taken short trades from this area only and avoid these long trades. Another short trade to take, that would have been profitable. Now notice as well here, you would have taken a couple of short trades there. Notice here we've got higher lows on the CCI versus lower lows on the price, hit this minor support at 78.68. And we expect this to bounce to the upside. And again, minimum target range to go to will be from that low, take it to the previous Fibonacci range, which was there before that divergence started. And our minimum target retrace would be between that 23 to that 38% level. So I'll keep that in there as a potential target area. Again, you can trade those long positions, but again, I'd avoid trading those long because I'd only trade in the direction of the higher time frame, which is bearish at the moment. So wait for it to break to the downside again if it happens, especially if it breaks below this support, to go short again. High grade copper, it's bullish on the monthly, above its moving averages. On the weekly, it's bearish, broken down below the moving average, so only take short trades on the daily if you're trading the daily. And on the daily chart, you can see there it's broken through this support at 43,280, and it's now hitting this other minor support at 42,391. Now, that could still bounce, and the reason I say that, let's say that at the moment we're only going bearish at the moment, we don't take long trades, but it could still bounce because if we go to the 1 hour chart, you'll notice here we do have a bullish divergence. It's a very small one, but sometimes these small ones are more effective in terms of a move. So you can see there higher lows on the CCI versus lower lows on the price. And again, to give you some context in terms of where it may bounce to, we'll take it. Typically, you can take it back to the previous high. You probably take it there, and that's a pretty small target area in there. But in this case, I'd like to take it back to that significant high there. And that sort of aligns with this previous support area. So if we draw a target area between that 23 and that 38% level, that's where we expect it to retrace to. But again, not to go long, but I'd like to see it retrace before taking any more short trades and then see a further decline. And by that stage, we should see the CCI also start declining as well. Lastly, look at iron ore. Looks like it's a fairly bullish move on the monthly, but the CCI is not showing any indicator at the moment. On the weekly, it's broken down, giving us a bearish signal. And on the daily, likewise, it's bearish. It's hit and penetrated this minor support, 782. No further declines yet. So if we go to the 1 hour chart, now there's no divergence here on the 1 hour relative to the other charts. So you can see there the CCI is moving in line with the price. So at this point, I'd suggest the price may still fall further. But of course, we could bounce any time. But at the moment, taking only short trades with the CCI and the daily showing short positioning. So if you got value out of the video, hit that like and subscribe button. Don't forget to subscribe to the or follow the X account or the Twitter account, where I do updates where I see minor updates between these video postings. Thanks for watching, and I'll see you in a future update.